Do the pieces of AOL's programmatic ad search business meld well with the pieces of Yahoo's programmatic ad search business?
I think AOL's programmatic platform that they've been investing in, most notably with Adapt TV, would meld with anybody who wants to be a player in online video, particularly mobile online video. So Yahoo is clearly a major player in online video, but what they have not done is really developed a good mobile business as of yet. They're really lagging in mobile by their own admission. So, the AOL Yahoo merger, I think a lot of investors are really skeptical about the real viability of that going forward and whether that would really create shareholder value.
Well, at least one of them, isn't it, Schatzker? I mean, is Starboard, with just 1% of the shares outstanding, in any position to demand anything of Yahoo?
Well, Starboard is in a position to demand something of Yahoo only in as much, Corey, as Starboard believes that most of Yahoo's other shareholders feel the same way. It's pretty hard to argue with the logic that Starboard laid out on September the 26th in its first letter to Marissa Mayer, illustrating numerically how much, so to speak, trapped value there was in Yahoo by virtue of the Alibaba and Yahoo Japan stakes that were either not being fully valued by the market, or the stub Yahoo, the rest of the business, the operating business, for example, that may not have been fully valued by the market. Either way, no matter how you do the numbers, you come up with a higher number than Yahoo's current market cap of $47.4 billion. And so if that holds for most of the people who own Yahoo shares, then Starboard does have some power, in as much as it's driving the dialogue forward and making it impossible for Marissa Mayer to talk only about things other than unlocking trapped value.
Right. I talked to both Marissa Mayer and the CEO, and Ken Goldman, the chief financial officer, both off the record. But what I will say, is that they've gotten a lot of advice on this issue, and probably just about every tax attorney who's looked at these issues has offered an opinion to them, some of those that they've paid for. Is Starboard really putting new ideas on the table, Erik? Do they really think that they bring something new to the table?
There's nothing new. I don't think Jeff Smith of Starboard would say he needs to put anything new on the table. What he's concerned about, what today's letter had to do with, are the signs that they perceive that Marissa Mayer is going to do something other than a tax-efficient spin-off of the Alibaba and Yahoo Japan assets. However Yahoo and its lawyers choose to structure it, it needs to be tax efficient, and what they want it to be is a spin-off so that the shareholders benefit from that unlocked value and not Marissa Mayer. What they perceive is happening are two things. On the one hand, Marissa Mayer is contemplating big M&A transactions which scare the living daylights out of the folks at Starboard because they don't feel as though she's a good acquirer. And secondly, they're worried that instead of doing a tax-efficient spin-off, she's going to do a split-off, which would mean that somehow she exchanges the value of the Alibaba and Yahoo Japan stakes for some kind of consideration, whether it be cash or stock, which she could then use at her discretion for other purposes, presumably acquisitions. Like I say, they're scared to death of those because they believe that she's squandering shareholders' money.
Although, Paul, that may be the most tax-efficient choice, is to find some way to swap the asset as opposed to cash out the asset, which has a tremendous... It was a brilliant investment back in the day of the nascent Alibaba. Do we get a sense that some of the acquisitions, that in fact Marissa has been a crummy acquirer in all the acquisitions they've done at Yahoo in her tenure?
Well, the bottom line when you look at Yahoo and maybe the efficacy of all the acquisitions that they've done is it contributing to any top-line growth, which is a #1 operational challenge for this company? And the answer is no. We haven't seen any top-line growth really since Marissa has taken over. And one could argue that, the honeymoon is approaching its end between investors and Marissa Mayer. They want to see a strategy that will result in, top-line revenue growth. This is a business, the internet advertising business, that is growing at least 15% per year, yet Yahoo is unable to post any top-line growth, and that's really the challenge. So it's one thing if you go out and spend $1 billion on Tumblr or make a lot of small acquisitions that bring in some great talent, but investors need to see the result of all that in accelerating top-line growth, and we've not seen it yet.